year over year, it's up 73%. Year to date, it's up 53%. I'm going to tell you who's going to benefit from this. Little kids right around Christmas, because we're not going to be getting underwear and socks for Christmas with these rising costs.
Nice. I like that take. So we got to go back to 2011 to get here for cotton. I mean, is there a way to trade these types of commodity moves, Phil, or did we learn in lumber that you have to tread carefully?
No, because cotton has a lot more. It could run a lot more. I mean, we went up to like 225 back in 2011.
Really?
My homework tonight's going to be figure out what exactly occurred then. Was it a similar situation where, India's the second largest producer of cotton. One of their regions has been severely hit by it's like a worm that affects the cotton ball. So it's wiped out about 34% of their crop, and there's been wide expectations that it could be north of 50%. So that could really put a supply crunch out there. And with China trying to buy up all the cotton there is, oh man, prices could go a lot higher from here.
Do we know if the worms are transitory? Some, you slice them in half and they're still worms. It works like that. Do you know if that's how these cotton worms work?
I have no idea, man. We got worms. That's all I know.
All right, bottom line is another reason for supply to dwindle in a needed commodity ahead of the holiday season. It sounds like you're looking into trading it, Phil. It sounds like you want to get long cotton after you do your homework.
So, yeah, we picked some cotton up for some of the clients on small correction we had. I mean, it's going with a whole number of different commodities out there. Not to just switch topics, but coffee, that's another one that reignited back to the upside today, and it looks like it could break back out. Platinum in a massive move higher. In all the grains, massive fund buying, wheat, corn, soybeans. Wheat futures, now Chicago wheat's over $8. People thought I was crazy with that kind of call. There's no wheat out there. When you get to the Minneapolis wheat, that spring wheat, it's not a lot of supply out there. So, and everyone's trying to grab it. There's a frantic buy for any excess commodities out there by a number of countries because they want to ensure their stockpiles are safe in case of, another COVID or something, or supply chains aren't resolved. So they're trying to build up, their coffers as much as possible. So this commodity bull market, it's just the party's starting, man.
Phil, we talk often, but one conversation from the end of September, I jotted down some notes where basically you just said buy anything, pretty much buy everything. You can't really go wrong on the risk on move. So I got to say you pretty much nailed it. The other one you mentioned, gold to a 1800 level again. We got there, we're stalling out, so the trade since we spoke on that worked as you planned. What do you think about now as gold's struggling again at the same place?
So this is what's happening with gold. So it's kind of sucking people back in as it goes over 1800. You get these people like, oh my God.
Just when you think you're out.
Yeah, it's up a few percent on the year, maybe. It gets into the black. Everyone starts buying it. Well, what happened is you had that Delta variant, slowed down some of the growth. We saw all this talk about rising interest rates, the Fed's going to take action. That, what it did was it flattened out the curve. Well, the next thing the curve's going to do, because all the interest rate hikes are baked in and the tapering of the short end of it, once growth starts to accelerate like we expect it to, the yield curve will steepen again. And I'm telling you, I really believe gold futures are probably going to sell back up. 1751's critical support, 1725, 1685. We start getting like big washouts on there. Buy it, but you're going to have to hold on to it for a long time for it to come back up, probably first, second quarter in the next year when some deflationary pressures come in.